Good afternoon. This is October 28th, 2022. This is my weekend report. I'm doing it with about an hour left in the trading day because I wanted to show you some things that you can do with HGSI and when the market is open. Anyway, let's go ahead and get started. This is my standard risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell all trading strategies are used at your own risk. If you don't have HCSI, you should. Just go to highgrowthstock.com and you'll see the link on the home page. If you go to this web address, and you can get a 30-day free trial. I'm going to begin with thinkorswim, but before I get into this, I want to mention that at the end of this video, I am showing a list of subjects that I am going to do if I do a webinar series. Some people have asked me to do it. If there's enough interest, I'll do it. Otherwise, I won't waste my time. And I say waste my time. It's just not worth it unless a minimum of 30 people and preferably around 50 people attend the webinar series because I only charge $100. Plus, you have to be a member of the Insider Club. So it's inexpensive, but I keep it inexpensive because I want people to attend and also to learn how to use HGS Investor. So I keep the price low. I don't have to travel anywhere. You don't have to travel anywhere. It's all online, and it would be 8 sessions. I'll talk about that more at the end of the video. Anyway, this is what really sparked the rally today. I believe this is Apple. This is today's action. You can see it reported yesterday after the close. These are 78-minute bars, and you can see the wide range bar here. Then it started tightening up, and here's where Apple opened today at 144.94, and it just took off from there. You can see that it's up over here at the left. You can see that it's up nearly 8% or $11, and other stocks fell into line after this, and a lot of short covering, I assume, took place, and the market is holding up. It's at 96.79% of its daily range, up 293.08 on the NASDAQ, and the NYSE is up at 212 points at 98.32% of its daily range. These are the advancers over the decliners, and let me change this. Like I said, this is a 78-minute chart. I'm going to change this to a 5-minute, one-day chart, and then I'm going to click on I'll go to the NASDAQ Advanced Declines, and you can see that here is the pre-market, or this is before the market opened. Here is where the advancers opened, and they traded up here, and then we had a pullback below this area, and then at 9:45 a.m., actually around 9:40, you can see that the advancers started moving up, and then here's a big bar where buy programs came into the market, and the advancers have climbed it steadily. We had a little pullback here on the 5-minute chart, but it reversed, and now if this continues over the next hour, you're going to see the number of advancers versus decliners continuing to go up. Let's look at the NYSE. Pretty much the same thing. Opening, then it came down hard, and then it reversed. Here's where the buyers came in, and then it took off, and you can see that the advancers versus decliners have been moving up all day. This is one of the many advantages of using thinkorswim. You can do things like this. Okay, let's stay on these symbols. I have a symbol here for up volume versus minus down volume for the NYSE. I have not been able to locate a symbol which does the same thing for the NASDAQ, but if you look at this, Here is the up volume versus the down volume. You can see the up volume has been moving up sharply compared to the down volume. So it's just another way you can graph within within Thinkorswim. What I do have for the NASDAQ, this is the up volume compared to the declining volume. These are stocks that are advancing, and these are stocks that are declining with the associated volume. So you can see the up volume is going straight up, and the down volume is really not doing much. Out of these indicators, the advancers minus the decliners is probably the most useful. And remember, this is a 5-minute chart. Let's go to the daily chart, 3-month daily. And here, this represents the daily bar. If you look over here, it's the percentage of the daily range is 99.8, which means that it's near the high of the day, the advancers over decliners. Let's go down to the comp. You can see that it's 86.75. So it's not quite as strong, but it's a very strong market day. Now let's go into HGSI, and I want to show you something that I came up with today. The beauty of HCSI is that it's you can do so much for it as far as building indexes and so on. So what I did today is these are optionable stocks and ETFs in the OCC and CBOE option exchanges, and these are stocks that are actually, they come from the option volume from these two groups, which are created and updated in HGSI, and I combined both of them in my non-index files because there are some options that are in on one exchange that are not on the other exchange. So weekly OCC and CBOE active options. Now I said weekly here. I'm not sure of that. There may be some that don't have weekly options, but in the non-index files under weekly options, the best securities to trade, these, I know these all have weeklies, and these are the most active options here. But in this instance, I'm using a broader look because there's 324 securities in here, and this is a mixture of both ETFs and stocks. So what I did here is I took this folder and I created sectors with the pie chart. Just did this and clicked on here and made sectors, and then I dropped them down here into, well, they actually went into my user groups automatically, and you can see that I have sectors now, and then I have a folder for ETFs too. So what I'm going to do is I'm going to rebuild the indexes and groups, and what that did is it rebuilt these indexes, and now I can click into a warehouse view. I'm going to go under my ETF analysis. Actually, I'm going to go down here to, let me close this. I want to go down here for the HGSI index analysis because these are indexes that are created by HGSI. I can click on here now, and I can see which of these optionable sectors are up most for the day, and you can see that it's the technology index up 4.3%, followed by utilities. What's down today? Energy and materials are down, and these have been strong. If you look here, or stronger, if you look here, since the beginning of the week, the energy index is up 0.2%. It's lagging now, but over the past several weeks it's been strong. So I can just go into the technology index right here, and I can change to that index group, and these are end of day. But in this view, top-down scorecard views for HGSI index analysis. If I go to number 6, it's going to show me stocks that are up for the day and where they're trading with their daily range. And you can see that Qualcomm, Microsoft, ON Semiconductor are trading near the top of their range, as is Roku. So I can bring this up. I can see that Roku is obviously a bottom fish, but it is moving up for the day, and you can see that it's been finding support in this area. On this candle right here, you can see this is, I would consider this a hammer because it traded down and then back up and closed, tried to move up, and then we've had a couple of weak days in the market. This just reflects the market itself, and then we're getting a low volume test right here. Now if I look over here, you can see the intraday volume compared to the 20, 50, and 90. The volume's well below where it normally is, but we're still seeing a little bit of accumulation in this stock with this low volume test, and the prior day is a no supply. So let's see where the strength is in this. I'll sort on raw combo, and this looks at intraday range. That's what I'm sorting on here. But instead of that, I'm going to sort on intraday percentage change. And you can see that Intel, which reported today, or yesterday, I think it reported today because of the gap up. Let's go ahead and check that. 1027 reported yesterday after the market. That's why we had the gap up. I wasn't sure if it was today or yesterday, but you can see shakeout yesterday, big move up today. You can see the volume's very heavy over here, and this is where the strength is. Look what else is in here. Apple, the stock that really ignited this rally today. AMD is in here. These are all bottom fish. The trends are down, but you can see the accumulation. So if you're patient and if you think this market's going to go higher, you can certainly buy some of these. One strategy would be to sell puts if you have enough cash secured puts, rather than buying the stock outright and just letting it sit there. Why not sell some cash secured puts? Let's just take a look at this quickly on AMD, for example. Bring this up. If I can type. Okay, well here, warning, earnings are coming up. So you may not want to do this. But as an idea, analysis on AMD, add simulated trades. Let's say you want to go out to the monthly expiration. If this is stock you would like to buy, you could go over here. It's currently trading for around $62. If you say, I would like to own AMD, but I don't want to pay $62 for it right now, you could sell this and bring in $288 on a single contract. Just click on this, -1, $288. Here's your risk profile. So rather than paying $61.77 right now, you would make money in this area right here, and if the stock trades down below this area at expiration, it would be put to you, but you'd be getting it for, if you look down here, you'd be getting it for $57.11. If the stock takes off and you want to get on, you can leave this put in place. It means you've brought in this amount of money, and you have brought in $288. And then, like I said, if it goes up, you can jump on the long side. And then if it doesn't come back down, you're going to have $288 in your pocket. And that's offsetting what it's going to cost out of pocket to buy the stock. Another thing you can do, and I'm just going to deselect this here, is you can go back into the Add Simulated Trades. And let's say you think this stock is going to go up, but you don't want to lay out thousands of dollars right now. I'm going to just click on the, let's see, at the money, analyze buy trade, and do a synthetic. And you can see that this is selected. It's called a combo, where you buy a call and sell a put. Here's your risk profile. You can see that if you're right on this, you can make some good money quickly on a single combo. If it moves up to $64, you'd be up $214. But if it moves the other way, you can lose money very quickly that way. Now, in an IRA, you're going to have, if to do this, you're going to have enough money to buy this stock if it goes down enough and it gets put to you, because you're going to have a long call and a short put. So what I'm going to do is I'm going to change this from the 60 to the 62. I'm going to deselect this. Now I have a 62 put here. So if you did that synthetic, the price you paid for the long side would just evaporate, and you would be exposed at 58.29 to where it would get put to you. And if it keeps going down, then you're losing money. So comparing the two, just remember, if you do this, if you would do a combo, you must be willing to purchase that stock if it gets put to you. It's going to continue down. So let me take this off. The long side, the call side, would be worthless at this point. And if it's going against you, the stock's going to be put to you at this level. And if it keeps going down, you're going to continue to lose. At this point, you'd be losing over $500, and the put or the call that you bought would be worthless also. So you'd have to add that to your losses. But if you're correct and you don't want to lay out a whole bunch of money, you can do this. I'm not going to send this. I'm going to confirm it. But let's see. Buying power. See, I'd have to have $6,200 worth of cash to purchase this. And I've got enough money in the account. I'm not going to buy this. I'm just doing this as an example. But it's a good way if you have a strong opinion on a stock and you don't mind having it put to you if it goes against you. You can use this. And if it is put to you, then you can start selling covered calls against that stock. I know this is all mumbo jumbo to you, those of you who are not interested in options, but it's just something else you can do. I'm just trying to show you that. Okay, let's get out of here and go back to HGSI. And where I am, I'm in the technology sector. I can't go back, so I have to drop down here and then go up to the HGSI analysis. Now, things have probably changed a little bit since I've been talking. And if I ever want to update these indexes, first of all, I'm going to close that warehouse because it slows things down, and then I just go in here, select this, rebuild indexes in group, and just that quickly, these are rebuilt, and These are the current prices of what's going on within each of these indexes. Now, if I want to look at the ETFs, I can change to this group. This is a percentage price change one day, but this is yesterday's information. So I have to move up to my ETFs, select scorecard ETFs intraday, and then I can see what's going on. This is sorted on percent range. So consumer discretionary spider, it's down for the day, but it's at 99.56% of its daily range. If I bring this up, you can see that it gapped down in the morning, but now buyers are stepping in, and it is closing, or it's at near the high of the day right now. Here are some of the ARK funds. Here we're getting a low volume test on ARKK today. You can see in this area, over here especially, there was accumulation. These are hammers. This one's a hammer. This one's not quite a hammer, but then we had a VPA flag strength seen returning after a downtrend. Then we had, it wasn't quite a shooting star, but you can see there was profit taking. And then yesterday it was down a little bit, but today we're getting a low volume test so far. And this is based upon end of day volume. See, this is projected volume at this rate. This low volume test is based upon this bar right here. Okay, I don't want this to go on too long. I just wanted to show you some things that I'm working on. These are all optionable, and that's why I went into Thinkorswim to show you some strategies you can use with options. I don't have time to get into this in depth, but let me show you what I'm thinking about. And I'm only going to do a webinar if at least a minimum of 30 people show interest, and I don't even want to do it for that. I'd prefer to have 50 because then it makes it worth my time a little bit if I can get 50 at $100, $5,000 for 8 sessions, and you will learn a lot about HGSI because I've spent 22 years or 20 years at least using this program, and I've said it before, I learn something new all the time, just like what I showed you today, creating those sectors for the options and prospecting that way. Now, these are some things I'm thinking about: top-down market and sector analysis. This is the most critical because 60 to 75% of stock movement is determined by market and sector strength. And you can see that today. I mean, it looked like the bottom was going to fall out of the market after Amazon reported. The market reversed, and you can see how the advancers are swamping the decliners. I'm going to do the NASDAQ chart analysis, NYSE chart analysis. These would be end of day, but the market's going to do what it's going to do. I've heard so many comments about how this market is destined to go down, but you know what? Over the past several days, the internals, other than for the NASDAQ 100, the internals for the broader market have been good. So it was looking like it wanted to go up. Sector analysis, comparing RS with a ranking module. HGSI index analysis, and this is where I saw that the internals were good other than the NASDAQ 100. I just wrote these S&P indexes down. Top-down prospects, long and short from going top-down. And then the warehouse. Why I constructed most of my warehouse views the way I did. The warehouse field gives information when looking at the charts. End of day, these are Wyckoff, VPA flags, days since the crossovers, RS stocks, buying strength, box stocks, industry. It shows all this information in the warehouse, and these are all things that we can analyze on and fan up or down. Charting. By charting, a lot of them are synchronized to the warehouse views. I'd point all that out. The undercut and rally chart and scans have been good. They find stocks and ETFs when they're starting to move. Market charts. I have several market charts we can look at, both for the NYSE and the NASDAQ, and then HGSI index charts are very valuable, and I apply those charts to the indexes that are created by HGSI. The indexes created by the program are really one of the many strong features, or strongest features, in the software. And then end of day, crossovers, stocks that are setting up using the undercut and rally, and other charts, relative strength, looking for relative strength, and sectors and industry groups on the move, and then smart groups and user smart groups. I've got some good user smart groups that I would be covering. And then I just went over this, alternatives to buying or shorting stocks or ETFs. You can sell, say, cash secured puts on stocks you want to own. Wheel strategy. If the stocks or ETFs are put to you, you can then sell covered calls against them. Create a synthetic on bullish stocks you'd like to own. Buy in and out of the money spreads for directional trades. This is misstated. It's well, no, it isn't. It just should be buy in-out spreads for directional trades. I typed it out, buy in, and I'll show that here in a minute. And this eliminates stops. And then I'm going to talk about risk control and position sizing with spreadsheets. And that's a lot to cover in 8 sessions. But if you're interested, let me know. Ron at High Growth Stock. I've asked for this in the past. I didn't have much response, but now that I've laid this out, maybe there's more interest in it. So let's go in, and I wanted to look at that last thing that I talked about, in-out spreads. Let's just arbitrarily take Apple. You can see that Apple strength seen returning after a downtrend. High volume adds to strength effort to rise, bullish sign. Let's go into here. I went ahead and put Apple up. You can see what it's doing today. It's pulling back a little bit from the high. You don't want to lay out a bunch of cash to chase this, but you'd like to participate. So you can just go into analyze, click on add simulated trades, and we can do what's called an in-out spread, which means you buy one in the money. You have to hold the control key down. You can see the ghosting. So this one's slightly in the money. It's a 155, and then I want to sell one that's out of the money. Let's go out to the 160 and sell that. And these, you hold your control key. Here's the 155, the 160. Costs $2.43 on a 5 wide spread. Now, if it's under 260, it's worth doing. That's the rule that I learned when I took a class on this. So here we are. Let's just look at the risk profile. So right here, this represents the current price. So if it moves up from here over the next 18 days, and it gets above this area right here, it's going to be profitable. And if you get to this point, you'll be fully profitable. And if you look, I'm just going to leave this here, and if you look over on the left, it's 255 would be the max profit. And currently, if the Apple would continue to move up this quickly, it would, the purple line represents what the current price would be right now. But anyway, you don't really look or hold these things until the end of expiration. What I do is I will buy them, and then I'll put a sell order in I'll take whatever I paid for it, 243 times 1.55%. And if the stock, Apple, would hit that within the next 18 days, I would make a little over 50% on the trade. It may not look like much, but look at your risk. Your maximum risk is $244. If you look over here, 245. So if Apple totally falls out of bed and reverses course, you're only going to be out $255. Yeah, it's not a big gain dollar-wise, but think about it. If you do these a lot, and if you're successful at picking direction and you get 50% return on your risk, that is a good way to make money without worrying too much, and it lets you sleep at night. Anyway, this is another thing that I would be discussing during the webinars if I do them. Thanks for listening, and if you're not interested in these options at all, I'm sorry I wasted your time, but thanks for listening anyway. Let me know if you're interested in a webinar series beginning in a week or two. Thank you.